Hello friends, good week. How are you today? Vlad is here with you, and this is the weekly review for the 16th of January 2012. Well, the previous week was kind of little weird. We got very boring first few days. Then on Thursday it does look like the euro is getting optimism, and then on Friday all turned down again. S&P cut a friend's credit and from perfect like they did some while ago for USA. Uh, can we say the market expected that? Yes. Can we say the market expects some more? Yes. The thing is that we are getting closer and closer and closer to merge, when Greece will have to show what they did and what do they plan to do with their debt crisis, and that's what all the market eyes for. Now, how it's going to affect exactly, no ideas, and that's why uh, if we take a look on the euro dollar, right? Let's start with the euro dollar, with the most common major. There is a divergence, clear divergence. So it's question of time only until we get the retrace. If we go for weekly chart, we can see divergence here as well. We have a lot of support area around the 125, so a little lower 122. On monthly chart, we can see clear, beautiful support area, right? So the question is when exactly it's going to stop. If you ask me, I would not jump into the euro dollar as it is. I would look for opportunities on other currency pairs, like for example Euro Kiwi, like for example Euro Australian, like for example Euro Canadian. From my point of view, these look much better. So let's go for the chart and see what opportunities we might have and the market might build for the upcoming week. Let's start with the euro against the Canadian. If we take a look here, we have very stiff support just right here around the 128, 127.70. The lower one is around 125, maybe a little higher. If we take a look on the possible duplication area, as you can see, right, it takes us pretty much to the same area, around the 127.70, maybe a little higher, right? If we take a look on the stochastic, we are oversold already. Could it reach this area, or should it return before? No idea. No idea. But the daily chart has very amazing divergence, as you can see here, right? As you can see here. And if it will reach this area, or on the very extreme, the next support, and this divergence holds, we should get a kind of, I would not say immediate, but kind of a full retrace to the stiff support area around the 133.70, 134. For me, it's only question of time until it's going to happen. But don't forget, we are talking here about weekly and daily charts, which means it's going to take time. No, it's not going to happen in one day. No, it's not going to happen in 2 days. Most likely, not even in 3 days, and not even during the week. But it's going to build itself, and the move is going to happen. So patience should pay for itself in this case. Let's continue and see other opportunities. Let's take a look on the one of the pairs that combines the Euro Canadian, and let's see the dollar Canadian. See that? You see the dollar Canadian? What a beautiful triangle we have. It's a bullish triangle normally, right? 1, 2, 3, 4, 5, 6, and now we are looking for 7. 7 should break. Where? Up or down? Based on the simple technical rules, it should go up. It's a bullish triangle. After a bullish up move, right? It built a triangle and it should break up and should take us to 107 at least again. That's the bullish move started. That's the triangle. Now we should have the move up. And based on some expectations, we could go to kind of 108 area, maybe 110 area for dollar Canadian. But it's difficult to avoid the possible divergence that is being built on the weekly chart. So we have to have some up move so this divergence could complete itself. So my expectation is if it breaks up. If and when it's going to break up, then we can see the pair going forward, stronger up. We have many news coming from Canada this week, so it definitely could affect. If it breaks down, I personally would avoid taking this down move, as this triangle is bullish. Now let's take a look on the next pair we have on the list is Aussie against the Euro. Also very beautiful situation, also very solid. We discussed about this sideways moves long time ago. See that? Now it seems like the pair wants to duplicate itself, right? It brings us to around the somewhere in between 120 to 122. That's what we have. Back to the daily chart. If it reaches this area, we might have beautiful continuing divergence from the very bottom and from the last two bottoms. So around this area, 122, 120, that should be a nice area to attack, as this pair expected to retrace. If from 120, I would say for 600-700 pips. That's my expectations. If for 122, I would say maybe 4, maybe 6, not more, 100 pips. That's my expectation for the Euro Australian. And last Thursday bullish engulfing, that's exactly what it says. That's exactly what it says. The bulls are here. Get ready. When exactly it's going to return to make the move, no idea. But it's getting ready. And this, maybe it's not a sign for the bulls are here, but it's a sign that bears begin to get out. Right? And based on the simple rules, the duplications of the weekly chart should make the stop then. So that's also a nice beautiful pair to look for a possible interest. Plus we have of course 20 RSI, and we also have here a very nice bullish butterfly, and that's of course a daily bullish butterfly. And based on this harmonic bullish butterfly as well, we can see we can expect bottoms, and these bottoms also is around 120, maybe a little lower, right? And we can see the very extreme area, question of time only until we have the full retrace. Based on the harmonics, we can expect a move to 131. Is that too ambitious? Well, let's see. Only time will say. Alright, the next pair, it begins to be very interesting from my point of view, is Swiss with the Japanese yen. Based to weekly chart, we have a divergence. Right? We have a divergence. So it's question of time only until we have a stop. Our stop could happen just right here around this kind of 79, little below, or even the support area 76, 75. But if we take a look on the trend line, we are now there. So from my point of view, it's already okay to be in. It's already okay to be in. There is a small divergence line. If it will be broken, then well, maybe that's a sign to get out, but still the next areas are too close, and any low attempt should retrace the pair up right after that. That's my opinion regarding the Swiss yen. The next interesting pair I have on my list is the euro against the franc, based to the intervention from the central bank. They promised to hold the 120, and we are almost there. We have a support area, very stiff support area, all this area, right, from 120 to 120.80. And on 4-hour charts we can see a divergence being builded, right? So it's a question of time. It's going to be this kind of divergence, or it's going to build another divergence, a new divergence on the next lows all the way to 120, and then from my point of view we will see another strong stiff retrace for the euro against the franc. As long as the central bank from Switzerland promised to hold the 120, I don't see why not to be involved in a possible, beautiful, also technical buy. Let's go for Aussie franc, and based to the Aussie franc and its daily chart, it looks like we're also reaching it up. Let's find some resistances on the weekly. Based to weekly chart, we have the 50, and we have the parity level, which are also very stiff. And of course, then we have the next area around 102. We can see weekly chart begins to build a divergence. RSI begins to be oversold. Daily chart is creating a divergence. See that? Is creating a divergence. Any new possible attempt to create new highs based to this divergence should make the effect and make the move down. It will take time. It's early yet, but it should happen. And it should happen within the next it's daily chart, so within the next weeks. Let's take a look on the New Zealandian dollar. Also very nice pair, and I would say look for somewhere in between 0.8050 to 0.8250 as these two extremely important resistances on weekly chart. And on daily chart, these areas could here create very nice continuing divergence. Any attempt to reach these areas should be affected then by a strong down move from the pair. From my point of view, still early, but it is definitely reaching its very critical level. Let's take a look now on the gold. The gold has daily downtrend line, as we can see, right? Stiff line. Stiff resistance around the 1670. Overbought areas also for the gold on the stochastic. From my expectation, it should continue little higher, grab it little bit before the down move begins. And based on 4-hour charts, we could expect another ride up to create here another divergence. See that? At first, already started. Now it seems it's going to create the next divergence during the next days and then begin its down move. From my point of view, if it does follow this divergence to these areas around the 1670 and starts the down move, I can say it's reaching the 1600 area at least. Now, scenario number 2 for the gold could be breaking below this trend line. What happens if the up move does not happen? Okay, it could happen. So we will take a look here on the RSI 50 and the trend line. Break below both should open the doors for the move to 1600. Right? So stay tuned for gold, and it's possible to retrace best one on the scenarios with a divergence or with a break below RSI 50 and below the trend line, the 4 hours trend line. Alright friends, so these are my trades for the upcoming week. From my point of view, they are going to be the best. Thank you very much for taking the time to watch this video, and I wish you beautiful green pips week with a lot of opportunities and good moves from the market. Once again, thank you very much. Enjoy your week. Yours, Vladimir. Bye bye.